Hello and welcome to the Global View on this Friday. Well, global equity markets rallied overnight, with European stocks recording their biggest gain in 6 months after the ECB hiked rates, but suggested it's at the end of its monetary policy tightening cycle. On Wall Street, the major indices finished sharply higher, along with the US dollar and longer-dated Treasury yields, with expectations that interest rates will be left on hold this month. Investors were buoyed by the resilience of the US economy, with retail sales increasing more than expected and producer prices hotter than forecast. Now, stocks specifically, HP fell after Berkshire Hathaway sold around 5.5 million shares of the company. The car makers are also in focus over wage negotiations, with General Motors upping its contract offer for a 20% pay hike. Ford has also offered a 20% wage hike to its workers, but is preparing for strike action nonetheless. Moderna rose after a European regulators advisory panel recommended authorising an updated COVID vaccine from the company. Visa slipped after the payments processing giant said it was engaging with Class B shareholders on a proposal to convert their shares to Class C and Class A. And chip designer ARM's American depository shares opened more than 10% above its initial public offering price in what is seen as a sign of confidence for other companies planning to list their shares. And a surge in the iron ore price has seen US listed shares of both BHP and Rio Tinto jumping higher. BHP there, its ADRs up 4%. Well, we also got some results from Adobe out of the States at the same time. For a review of that and more broadly what's going on with the equity market, with a particular focus on tech, I caught up with Brad Gastwirth from Unearthing Opportunities.
Had a little bit of, that rally's coming off some weakness, right? So I think right now there's a little bit of a tug of war with bulls and bears. I think that you look at economic data and the retail sales numbers, the sales numbers are coming in strong, but we have to remember that also that's driven by some of the stronger oil prices. So some of that uptick is really coming from inflated prices. Ultimately, the US economy has not really gone down as much and has not really gotten hit hard yet. And I think that's gotten the bulls a little excited. We're not really coming into a hard a landing. We're really, looking and weathering the storm better than I think people would have thought. Corporate profits are mixed. I think you're seeing a mix on the earnings side because of inflation, prices that are higher. But I think ultimately you have a lot of money still on the sidelines that needs to be invested. And even with rates higher, you're still getting better yields in the equity market. So I think it's, there's a lot of reasons to be concerned from a macro perspective, from what's going on in China to on the political side, and then also what's happening with inflation, and then on the technology side with artificial intelligence. So there's a lot of little, big potential headwinds. But there are also, some reasons to be involved when you can't really get these returns in other asset classes currently.
Brad, just in terms of news stocks specifically, SoftBank's ARM soaring on its debut. Of course, IPOs have been fairly thin in recent times. What was your reaction to that? And I guess what that tells you about the market at the moment?
Yeah, and Andrew, it's such a good point. Like, especially that last point you made, that tells you that money's coming back into the market. That deal was 10 times oversubscribed, and for one of the largest IPOs to be that oversubscribed at a valuation significantly higher than when SoftBank took them under, I think it's interesting. It's a great company. You had, NVIDIA, you had the failed purchase, which to me, I was very vocal. I never thought that would get regulatory approval. I clearly didn't. There's a lot of very large companies that are taking big chunks of that IPO, and that's been very public. You had the likes talking about NVIDIA taking a big chunk, Apple trying to take a big chunk, and others. I'm not surprised by that. But ARM really plays in the forefront of a lot of these technological revolution that's still going on. And with chips, they have one of the best, on the processing and some of the best patents. And it's no surprise that they were a hot IPO, and it was, expected to be so.
Elsewhere, just in terms of results, Adobe, its third quarter revenue, they're up 10%. What did you make of those results?
Yeah, and we've certainly talked about Adobe as one of my favorites on the AI front. They're executing on all cylinders. Now, the stock didn't really bounce significantly off a record revenue. Again, they're posting record numbers. The earnings were solid. They beat. If you look at guidance, it was in line with the very heightened expectations. But the numbers they're executing, they're doing quite well, and they're a winner on the AI front. So if investors want AI exposure outside of the typical ones that are mentioned, outside of the large cap, mega cap stocks, I mean, Adobe is right there. That's a great large cap to be invested in for AI.
All right, elsewhere, Nvidia is always top of the list as far as investors are concerned. What are you seeing there at the moment?
Yeah, absolutely. I mean, it's a stock du jour, especially now with the hot IPO of ARM, which plays right into the same sort of space. Now, NVIDIA is a little bit more of a pure play on the artificial intelligence side because they do really, provide the life of the artificial intelligence. But ARM is right in there as you sell more of these complex boxes. ARM has a lot of that winning chip sockets in there. So I think NVIDIA, they're one of the best run, best executed companies. What I'm getting concerned about and what I'm starting to pick up is a little bit of, the order validity. I mean, are you seeing now companies putting in more than what they really need? So are the orders in the future, are they real or are they not? And I think that's something that we're spending a lot of time on because that really makes, that plays into a lot of things with these second and third tier AI companies that are trying to secure allocation. Are the big orders that they're putting in real numbers, or they inflated to try and secure some allocation?
Brad, let's move to Apple. Share price has been under pressure on a couple of fronts there. Certainly, it's had its latest releases, maybe underwhelming the market there. Certainly because they didn't lift prices. But also, you're seeing what's going on with China at the moment, with Apple devices supposedly being banned in the workplace. Just talk us through what's moving for Apple at the moment.
Yeah, and I mean these are really great points, Andrew. And if you look at, there's been a little bit of a divergence in large cap technology stocks, right? Apple sort of diverged downwards when you've had the other likes. I'm still doing quite well from like a Google, Meta, et cetera. And there's a lot of different crossfires and crosshairs going on with Apple. Let's start with the China point that you mentioned. First, I mean, right now on the government side, they're being banned. Does that trickle down to consumer? If so, that's a big blow. Now looking at just the iPhone 15 itself, very underwhelming. I talked about this prior to the launch that it was going to be underwhelming. I've heard that even on the supplier side, there's some issues getting enough, units out this year. So it's a good year to have issues on the supply side for them, given that demand isn't that robust for the 15. Very little upgrades. You had a new titanium casing on the high-end Pro, not that exciting. I think you still have a very large install base that still upgrades. But if you don't need to, this certainly isn't a launch that makes you want to.
And Brad, I just wanted to check quickly on Tesla as well. We saw the share price jump earlier in the week. This is off the Dojo supercomputer. It added about $70 billion to the market cap there. What is it exactly?
Well, so on the supercomputing side, the thing that's so exciting is that, so for Tesla, where a lot of people have invested, especially on the retail side, are looking at it as this electronic vehicle company. But one of the biggest strengths that Tesla has is their supercomputer. But their supercomputer is probably the largest. If it's not the largest, it's one of the largest in the world. And it's so powerful that that's really all of their technologies running from. And I think you're going to see some really interesting things from the company down in the future. And that's what I think a lot of the bulls will really say is the driving force behind the valuation for Tesla. Now, the supercomputing side is going to be running all kinds of artificial machine learning intelligence. It can do really, really complex algorithmic, situations. And I think that's what's really, when you see supercomputers in the news, and typically governments had some of the largest. Now you've had some private sector have the largest ones in the world. It's scary to some degree because what is that computer ultimately going to be able to do? And will there be regulatory approval and regulatory guidance for these supercomputers? It will remain to be seen. It's been a little bit of a hot topic on Capitol Hill here in the U.S. as AI is getting a little bit ahead of itself with generative AI. So we'll see. I mean, it's exciting, but it's also very scary to see what it could actually do to the global economy.
But I know, speaking to you more recently, Brad, will you be reticent about buying Tesla at these levels?
Yeah, exactly. I mean, I like that. I think they're one of the greatest technology companies, but I don't see a lot of value in buying the stock at these valuations. I think it's very rich in valuation. Would I would expect it to come down. I think there's valuations are never a reason to buy or sell a stock. I say that a lot, all over, and especially on TV. But it really is never a reason to buy or sell. But the evaluation certainly is a reason to double check and make sure are you looking at things properly or not. And things get usually things look expensive, but typically they're cheaper based on future earnings. When you really discount things back significantly and they still look very expensive, it's hard to chase it, and that to me is where Tesla is. So I love the technology. I can't get around saying for people to put new money to work at these levels.
So, Brad, if you're a long-term investor, what would you be buying right now?
So I still like on the large cap side. I think Microsoft is going to blow numbers out of the water for several quarters and several years. I mean, the what they're doing with their AI approach and offering in the Office suite is really going to drive revenue and earnings for the company, and specifically earnings. So you see profitability go up significantly at Microsoft. Now these stocks, I mean, the stock has made new highs. It's continued to, but it's still a favorite. Amazon is also going to. I expect at some point from the U.S. regulatory will break up that company. I do think that's a very good possibility in the next 3 to 5 years. I think the company's worth more as broken up individual parts than the sum together. When you look at it right now as a one company, I think the sum of the parts are worth more, and I think that stock will continue to execute quite well. Those two large cap, I don't think you can go wrong. Again, on the AI front, I think Salesforce.com, Adobe are great stocks. And if you look at valuations, ARM actually looks cheap relative to some of its peers, like a Broadcom or Nvidia. So you can actually make argument that even with that stock at its debut, with that return, that stock's not that expensive. So I think those are a good handful of stocks, from the large cap perspective, that I don't think you have to worry about at all.
There we go. That's Brad Gastwirth from Unearthing Opportunities. Well, that is the global view for this Friday. Join us again, of course, for Monday for more opportunities in investing globally. Stay with us, though. The Open just around the corner.